Analysis in the world of business. It is Business 360 and my name is Blyden Okem. On Business 360 this morning, global economy would suffer if trade tensions escalate, according to IMF. We begin from there. The International Monetary Fund said a global growth has slowed less than originally feared, but the world economy would suffer from further trade tensions. In its latest World Economic Outlook, the IMF revised its 2025 global growth projection to 3.2%, a 0.2 percentage point above its previous projection in July. The tariff shock is smaller than initially feared, partly because of trade deals and exemptions, said Pierre-Olivier Gourenkas, IMF chief economist. Most countries also refrain from retaliation, he said. With the effects of the United States, a tariff already evident, Gourenkas said another round of trade anxieties could cut off about 0.3% from global output next year. The official noted that additional risks stem from the possibility of a sudden reprising of tech stocks, as well as from the sustainability of China's export-led growth model. According to Gourenkas, a clearer trade agreement and lower tariffs could strengthen output, likewise domestic policies, including those that empower entrepreneurs to innovate and thrive. The current World Economic Perspective, which comprises 3 chapters, was released at the start of the ongoing World Bank and IMF annual meeting in Washington, D.C. And now to Nigeria. The Nigerian National Petroleum Company Limited, NNPCL Limited, has maintained its resolve to ensure consistent fuel availability, competitive pricing, and uncompromising product quality across the country. The NNPC explained that a strategic partnership in the downstream petroleum sector are essential to unlocking value, driving sustainability, and enhancing commercialization. The Group Chief Executive Officer of the NNPC, Abayo Ojulari, stated this at the 2025 inaugural Annual Downstream Petroleum Week, organized by the House of Representatives Committee on Petroleum Resources Downstream. He described Nigeria's downstream sector as one shaped by transition opportunity and strategic reform, and noting that cooperation among industry stakeholders remains the key to a sustainable energy future. With Africa's energy demand projected to grow significantly in future, Ojulari called for coordinated efforts and collective responsibility to ensure Nigeria is positioned at the forefront for opportunities and inclusive growth. Meanwhile, the House of Representatives on Wednesday resolved to investigate the state of $35 million modular petroleum refinery in Brass, Bayelsa State. The resolution of the House followed the adoption of a motion of urgent public importance moved by Honorable Billy Osawaru, an Edo lawmaker, at Wednesday's plenary session. It's titled Motion of Urgent Public Importance on the need to investigate the abandoned $35 million modular refinery project in Brass, Bayelsa State 4 years after a huge financial commitment to that effect. The project, a 2,000 barrels per day project, is being handled by the Atlantic International Refinery and Petrochemical Limited in collaboration with the Nigerian Content Development and Monitoring Board. The modular refinery is intended to boost the nation's crude oil production, enhance local refineries, encourage indigenous participation in content development, and create jobs in the petroleum industry. Although construction was expected to commence in 2021, there are reports that the project has become a subject of investigation by the Economic and Financial Crimes Commission for alleged fraudulent practices. And now to Nigeria's inflation rate as its lowest since May 2022. Nigeria's annual inflation rate eased for the 6th month to 18.02% in September 2025, down from 20.12% in August, marking the softest reading since May 2022, mainly supported by foreign exchange stability and the harvest season, alongside base effect linked to the base year change early this year. The National Bureau of Statistics, NBS, discussed this in its Consumer Price Index and inflation data released on Tuesday. NBS data showed that the country's inflation declined by 0.72% on a month-on-month basis. Food inflation, the largest component of the inflation basket, decelerated to a 5-year low of 16.87% in September from 21.87% in August. The Consumer Price Index data noted that the food inflation rate was dropping by 1.57% month on month. The core inflation rate, which strips out the volatile prices of agricultural produce and energy, has slowed to 19.53%, down from 20.3% in July. However, the recent hike in the prices of fuel and cooking gas could impact subsequent inflation figures and the cost of living for Nigerians. And now let's look at the charts indicating Nigeria's inflation rate. The charts. According to statistical charts, we see in the numbers as at September last year, inflation in Nigeria stood at about 32.7%, went to a peak of 34.8% in December. After the rebasing effects, it began to slow down 2025 January to 24.48%, currently at 18.02%, which is better than previous standing of August at 20.12%. And now looking at the conversation, an energy expert, Dr. Wisdom Edang, will join a conversation to look at Nigeria's inflation rate and the consistency that's come from the inflation numbers and what the future holds for Nigeria. Dr. Wisdom Edang, good morning. Welcome to the show.
Thank you. Good morning. Thank you very much.
All right, let's start a conversation now. We saw the numbers from MBS Nigeria Bureau of Statistics, and quite interesting. Starting from the beginning of the year where the rebase effect took place, we saw inflation numbers coming down, but it's been consistent for the last 6 months. 6 months consecutively, inflation has come down. And many people are saying this are signs of big things to come. What's your reflection on this?
All right. I think it's a very important progress that we've made, and as I said, very laudable that we have been able to turn the tide around when it comes to the management of an economy in a very predictable way. You have said a number of things, and you have contextualized the nuances around the decline of the inflation numbers that we're seeing. First of all, we have the rebasing effect that was able to give us a better picture of our economy and take into account some aspects of the economy that perhaps were not properly accounted for previously. And that got us to right about 24 point something, and then we started coming down based on the real fundamentals of economics, which is stability of our currency, which is also the harvest period that we currently have, meaning more food produce. But all of those are fine. But let me play the devil's advocate for a minute and put side by side two contexts. We have drop in our inflation exposure, but at the same time, that also comes at a time where the purchasing power of Nigerians continue to dwindle ever so often. And the issue there is this drop, yes, is happening statistically. However, how does that translate to the livelihoods of the average Nigerian? What does that mean for the average Nigerian? Does that mean their lives are better? So I think we need to get to a point where the government is not only striving to decrease the inflation rate, but also trying to stimulate more opportunities for the ordinary Nigerians. Because as at this point, I would like to say that statistically, the numbers are down. But as it affects the average man, they're still facing a harsh reality due to reduced spending power. Another thing worth noting is that, you see, we have the statistics number, but let's be really honest to ourselves. A lot of prices of products and services have not come down. And this is the case. Now, not that they couldn't come down. They could in fact come down. But you have the role of the business people to play. But when the business people, some of them go to an agreement and they decide, okay, we're part of this union, we're not going to sell below this price, and they sort of ring-fence the entire economic sector where they are, in charge of. That means that no matter what the government does, the prices of those goods and those services do not moderate because of the effect of union. So, it'll be interesting to know what the government is doing to help some of these, to assist some of us that are experiencing such. In Ghana, I saw a headline that was quite interesting. In Ghana, the business owners unilaterally came together and decided that due to stability of their currency and the inflation decline, that they were going to reduce the prices of their products and services. We haven't seen that in Nigeria. There's still a lot of discrepancy in pricing where different merchants, depending on how influential they are, will still charge a huge premium on ordinary Nigeria. So we need, for us to see a cascading effect on all sectors and the effect on ordinary Nigerians, we need a cooperation of the people that are in the business mainstream and the effect of what the government is doing. Of course, we also need to stimulate more growth and wealth opportunities.
All right, Dr. Wisdom, and thank you. Good perspective there. What I've taken from your conversation is first, it's not just about the macro numbers, how it gets to affect the micro level of the economy. And you've talked about the union keeping prices high. There's a popular saying in Nigeria, when prices go up, they never return, no matter the economic factors. So I get to ask now, I put this side by side. First is, based on the fact that prices at the harvest season, because MBS brought the numbers and the indication is a stability of the naira and as well as the harvest season. And now, based on the fact that the law of supply and demand, we're having more produce coming now, are you saying that it doesn't necessarily will affect the price of commodities? Some Nigerians would say, well, a few commodities, the prices have been a little fair, it's not going higher. Are there no possibilities of bringing prices down, put side by side with the fact that the income of Nigerians isn't going up in that direction too?
You see, if we had a very elastic market system, yes, more supply should translate to more, drop in price, and that should more self-moderate. It should moderate itself. I'm going to give you a bit of a context. You see the network, the internet network that we're and the phone networks. Yes, their tariffs were increased. And at a point, if you went online to buy data, for 10,000, for 5,000, you probably get about 12 gig of data. And I watched that space very closely because that's a very elastic, competition economic system. I watched that space very well. It did not take very long at all. It didn't take very long before we noticed that now for 5,000, you can get up to 20 gig on some networks. And that's because the power of competition and the whole price moderation based on demand and supply. But here, this is the thing. We have a very skewed system where the agricultural production centers are not equitably distributed across the geopolitical zones. And so in between one agricultural production center and where the consumption is maximum is the middlemen. The middlemen control the prices. The middlemen can decide. And the whole agricultural harvest, in between harvest and consumption is insecurity. I like to be totally honest. It's insecurity. So someone will tell you something is happening up north, but to bring it down south, we have to deal with herdsmen, we have to deal with insecurity, we have to deal with a lot of security crises. So the thing is, all of those then add a premium to the pricing. So whilst we are rebasing statistically and saying that because there's more harvest means a decline in pricing, I'm telling you that those are statistical. If you look at the actual prices in the market, the premium for transportation and logistics, premium for storage, premium for the middlemen who control that whole space, and premium for security erodes completely statistical economic gains that we have just enunciated.
A multiple perspective from you, Dr. Wisdom Enang, but many concerns because you're not sounding positive about what could happen when many people, especially from the statistics office and the statisticians, are saying this one is a good one. But just final context from you, many are anticipating that if Nigeria's inflation goes down, it might go down to a single digit, and it would be something quite interesting. Right now, around 18.02%. Are there possibilities that in the nearest future, inflation in the country, the numbers can go to single digits, as we're having with most wonderful economies around the world? Put that side by side with questions that many people are asking. The question is, this month, I think it's this month or thereabout, early this month, we had the issue between Dangote Refinery and Pegasen. And many people are saying the prices of cooking gas are going up, the prices of petrol are going up. How can this, or what will happen in the next inflation data that we're expecting? A two question in one for you.
Yeah, I mean, think about, let's even define inflation. Inflation is simply a hidden tax. And that's a hidden tax on livelihoods and the cost of running homes, because it means that the basic cost of survival is all up. So gas and energy is one of it. Yes, that does have a counterbalancing effect on the inflation strides that we have met so far. We hope that that is curbed. The same thing with fuel. Fuel around the country has increased by some factor. Some places 50 naira increment. All of those affects inflation. But let me say something. George Orwell in Animal Farm did make a statement. He said, all animals are equal, but some are more equal than others. And so when we are looking at it from that lens, you want to ask yourself, what is the f of x, the function that creates Nigeria's inflation, and how much of these functions, varies from one another? So we have the transportation component of inflation. We have the FX. Remember, Nigeria is largely import dependent. So FX is the biggest elephant in the room. So you're asking me whether the fuel stuff affects inflation numbers? Yes. Is it going to be enough to change the whole tide, to erode completely and deduct, maybe up to 3% from our gains? No, because transportation, it's just a little component of it. The chief component of Nigeria's inflation happens to be from the import side of things. And let me also say that the inflation numbers from the import side is not just a number based on the volatility of our exchange rate. It's actually a number, a price for uncertainty. So you see, when the market prices that, imagine someone buys something for 1,700 naira per dollar in the time past, and the person estimates that before they get their make their sales and make their money, that it will sell at, the dollar will be 2,000 naira per dollar. What does that mean? The person inadvertently determines the price of that product in naira at 2,000 naira per dollar, so that whatever happens, head or tail, they don't make losses. Now, you think about it, the differential of 300 naira is nothing to do with the volatility of the naira at that point in time. It is the price of uncertainty. So what the stability is doing is to remove that uncertainty penalties to Nigerians. And so, without a doubt, to answer your very first question, if Nigeria is able to drop the exchange rate to about 1,000 naira per dollar, which we could get to single-digit inflation rates, and that is doable. I have a cautious optimism about what I'm about to say. It is doable if we are able to get a very good balance with next year's taxation, which is going to boost our non-oil earnings, from next year by the special grace of God. That is also doable if we have the sort of investment commitments within our oil and gas sector, which primarily is going to boost action as a nation and make us have moral effects to be able to defend our currency. So it's statistically doable, but it has more to do with normalizing our exchange rate at 1,000 naira per dollar or less.
All right, thank you, Dr. Wisdom, and a good perspective there. I took one word from you, a coin word from you when you said you are cautiously optimistic. You call it cautious optimism. Well, it has to do with Nigeria's economy and the projection we're looking forward to. Always this well time having you be part of the show, and your thoughts are deeply appreciated. Thank you for being a part of it. Well, it's been an outlook from Dr. Wisdom Enang, and the most important observation would be the possibility of Nigeria's economy, inflation standing to get to single digits. If that gets to happen, it also means that the government and all the sectors are doing very well within the context of Nigeria and business and economy. We'll go on a quick break, and when we're back, the conversation continues looking at the markets. Don't go anywhere. Welcome back. It's still Business 360. My name is Blyden Cape. And now let's look at the market as we set to close. The generality of the market, it's been ups and downs, but most importantly, gold prices hit an all-time high. And let's begin from the metal market and see how the metals are performing in today's morning market. Well, the price of gold in the market at $4,281 per ounce, gaining 23 points, 0.55%. Silver price dropping a negative 0.41% this morning. Gold going upward, silver coming downward. Copper price upward by 0.14%, and steel price also gaining 0.97% in the morning market. And quickly, let's look at the energy market and afterwards the agricultural markets. The energy market starts with U.S. crude, a price of U.S. crude at $58 per barrel, gaining 0.443 points, 0.76%. Brent, Nigeria's price benchmark, also at $62 per barrel, gaining 0.63%. Natural gas upward, gasoline, heating oil, and coal all gaining. And now to agricultural market. In agricultural market this morning, the price of soybeans stands at $1,009 per bushel, gaining 2.89 points, a 0.29% appreciation, and wheat price falling by 1.38 point at price level of $497 per bushel. Lumber gaining 7.5 point. Palm oil at 4,517 Malaysian ringgit per ton. Malaysian ringgit per ton, gaining 43 points in the morning market. And now to the currency market. Let's look at the state of the Naira against the US dollar. Well, we can start with Bitcoin then. Let's start with the cryptocurrency market. The price of Bitcoin at $110,885 for one Bitcoin. Bitcoin gaining 122 points after a recent decline. Yesterday's decline, a 0.11% gain. Ether also gaining a 0.45%. Binance gaining 2.81%. Cardano upward, but Solana, Ripple, Polkadot are dropping this morning. And let's conclude with the Naira perspective. The US dollar against the Naira, 1,468 Naira equaling $1. The dollar gaining against the Naira 4.29 points, 0.29%, and the Euro also gaining against the Naira by 6.6 points at 1,711 Naira equaling €1. The pound at 1,973 Naira equaling £1. The pound gaining 11 points against the Naira. A recent struggle of the Naira seemed to continue after last week's good performance against the majors, but it's a story that has to do with the world of business and Business 360 days. My name is Blyden Kim. Thank you for watching, and thank you for being a part of it.